Credit cards. A small piece of plastic that can unlock endless shopping, travel perks, and financial freedom, or trap you in years of debt. But what exactly is a credit card? How does it really work behind the scenes? Why do banks push them so hard? And most importantly, should you own one? Today, we'll explore all of this step by step so you'll know how to use credit cards as a tool, not fall victim to them. What is a credit card? Think of a credit card as a mini loan in your pocket. When you swipe or tap, it's not your money leaving your account. The bank pays the merchant on your behalf, and you promise to repay the bank later. Usually, that bill comes at the end of the month. If you pay the full amount on time, great, you borrowed money for free. But if you delay, the bank treats it like a loan and charges you interest. That interest is often sky-high, averaging around 22% APR in the US today. Some cards for riskier borrowers even charge close to 30%. Debit versus credit. Let's quickly compare. A debit card pulls money directly from your bank account. If you have $500 in your account, that's your limit. A credit card lets you spend first and pay later. But that freedom comes with risk. Imagine you go shopping with a debit card, the money is gone instantly. But with a credit card, you keep your cash for now, maybe earn some rewards, and only need to pay at the month's end. Behind the scenes of a payment. When you use a card at the store, a hidden chain of events happens in seconds. The merchant's bank sends the request. The card network, like Visa, MasterCard, American Express, or Discover, processes it. Your issuing bank approves or declines. Visa and MasterCard are accepted almost everywhere. American Express? Fewer places, but often with better rewards. Credit limits and credit score. Every card comes with a credit limit. That's the maximum you can borrow without paying. It might be $1,000, $5,000, or even $20,000, depending on your income and your credit score. Now, your credit score is like your financial reputation. In the US, it ranges from 300 to 900. A score above 750 is excellent, banks trust you. Fall below 600 and getting approved becomes tough. In 2025, the average American score is around 715, but younger adults often struggle because late payments or high debt drag scores down. How credit card companies make money. Here's the big question. If banks let you borrow for free, as long as you pay on time, how do they make billions? 3 main ways. Interest, the big one. Nearly half of US cardholders carry a balance month to month, which means banks earn massive interest. That's why total US card debt has hit about $1.2 trillion this year. Fees, annual fees, late fees, cash advance fees. Some premium cards charge $500 a year, but offer lounge access, travel perks, or insurance. Merchant fees, every time you swipe. The store pays about 2 to 3% of the purchase to the bank and card network. Part of this funds rewards. So yes, those free reward points, they're mostly paid for by merchants and by people who don't pay bills on time. Pros of using credit cards. Used smartly, credit cards have big benefits. Fraud protection. In the US, you have zero liability for unauthorized charges if you report them promptly. With debit, stolen money comes straight out of your account, harder to recover. Rewards, cashback, airline miles, hotel points, free insurance. Some cards even offer cell phone protection or rental car coverage. Convenience, accepted everywhere, linked to digital wallets, plus they build your credit history if managed well. Cons and risks, but the dangers are just as real. High interest rates, miss a payment, and you could end up paying hundreds more over time. Debt traps, minimum payments sound friendly but stretch your debt into years. Fees, from annual charges to sneaky foreign transaction fees. Small leaks add up fast. Temptation to overspend. Because you don't feel the money leaving, it's easy to go beyond your means. Which card is right for you? Before picking a card, ask yourself, does the reward system match your lifestyle? Frequent flyer? Look for travel cards. HomeBuddy? Cashback may be better. What are the fees? A $500 annual fee might not make sense unless perks clearly outweigh it. Where is it accepted? Visa and MasterCard are universal. Amex has killer rewards but limited acceptance. Should you get a credit card? So, should you even have one? Yes, if you can pay in full every month, use rewards responsibly, and want to build your credit history. No, if you often buy things you can't afford now, hoping to figure it out later. That's how debt traps start. Credit cards aren't evil, and they aren't magic either. They're tools. Use them wisely, and they'll work for you. Use them recklessly, and you'll be working for the bank. So, are you controlling your credit card? Or is it controlling you?